In business study, today topic is capital structure. What is capital structure? Designing of capital structure is a key financial aspect in any organization as because it has long-term financial implication. Capital structure is defined as number 1. Capital structure refer to the portion between owned capital and borrowed capital. खुद का पैसा यानी ओनर का जो पैसा है और ओनर के द्वारा उधार जो पैसा लिया गया है उसके बीच के अनुपात को कैपिटल स्ट्रक्चर कहते हैं. गर्स्टनबर्ग हैज़ डिफाइंड कैपिटल स्ट्रक्चर एज टाइप ऑफ सिक्योरिटी टू बी इशूड एंड प्रपोर्शनेट अमाउंट दैट मेक अप द कैपिटलाइजेशन इज नोन एज कैपिटल स्ट्रक्चर और फाइनेंशियल स्ट्रक्चर. In the remaining discussion of this part, the term owner's fund will be termed as equity and borrowed fund as debt, which is a common practice. Thus, total capitalization is equal to debt plus equity. Debt borrowed, equity owned. Debt equity ratio is equal to debt upon equity. Deciding debt equity ratio, it is important because both these differ significantly in terms of their cost and risk. For example, while debt may be cheaper in terms of cost, it may be more risky for any organization. It can be even wipe out the organization in adverse situation. Similarly, equity, although less risky, involves significant cost in terms of paying dividend till the survival of the organization. You have already studied in the various sources of raising fund. Factor affecting the capital structure. Capital structure is dependent on many factors, not an independent factor. It implies that capital structure should be designed taking into consideration all those factors which affect the effectiveness. These factors are number 1, project cash flow. Number 2, interest coverage ratio. Number 3, debt service coverage ratio. Number 4, return on investment. These are the 4 factors which is affecting to the capital structure. Number 1, project cash flow. Before designing the capital structure, cash flow likely to be generated by the project in which investment is being made should be worked out. Further nature of these cash flow in terms of functional should be worked out. If cash flow are high with some kind of stability, a higher proportion of debt is to stable option. In the alternative situation, a higher proportion of equity is preferable. प्रोजेक्ट कैश फ्लो कैपिटल स्ट्रक्चर्स को अफेक्ट करता है. पहला फैक्टर है प्रोजेक्ट कैश फ्लो और दूसरा जो फैक्टर है वो है इंटरेस्ट कवरेज रेशियो. इंटरेस्ट कवरेज रेशियो का मतलब है नंबर ऑफ टाइम्स, कितने नंबर ऑफ टाइम में इंटरेस्ट एंड टैक्स को पे करने से पहले आपको interest coverage ratio means the numbers of times the company earning before interest and tax cover interest pay obligation. ICR, EBIT, interest. If the projected ICR is high, the company may go for more debt. Debt service covering ratio. Debt service covering ratio is one step further of ICR. While ICR deal only with the interest payment obligation, DSCR deal with the obligation to paying debt installment too. Beside interest payment obligation, DSCR also takes into account payment obligation of dividend on preference share if planned to be issued. Thus, DSIR, profit after tax plus interest plus depreciation plus non-cash write-off, preference dividend plus interest plus debt repayment obligation. Return on investment, ROI. ROI shows the profitability of investment. ROI is higher than the cost of debt. The company may opt for the higher proportion of debt to be take advantages of trading on equity. They are mixing shareholder wealth as in the increase in the rate of return on share capital. But if ROI is lower than cost of debt, the rate of return on share capital decrease in case higher proportion of debt is issued. used. So use the debt can be favorable or unfavorable, which depend on ROI. So today we have been studied about the capital structure. What is capital structure? What are their formula? And which factor affect to the capital structures like this. Student, read you should read and understand about capital structure and their factors affect to the capital structures.